Hello, thank you for tuning in. My name is Eric Jefferson, Managing Partner with Trestlebridge Capital, Chief Investment Officer of Flagship Harbor Advisors. I want to welcome you to our weekly market overview for the week of August the 8th, 2022. As we recap last week, bonds modestly lower, stocks modestly higher, capping off their third straight weekly gain, off to a very good start this morning. And really, the narrative has been around the jobs report last Friday that absolutely smashed even the most optimistic forecasts. Although as we start to peel through it, something in there for both the bulls and the bears. The good news, we saw unemployment drop to 3.46%. That is the lowest level in the last 53 years. That supported the bull case that we are certainly not in recession. However, the flip side of that, many would argue that that strong reading, that strong data in the labor market opens the door for the Fed to continue to be very aggressive, raising interest rates to combat what is still record high inflation. Also, one thing to keep an eye on with respect to labor is initial claims. We get that data every Thursday morning. Again, that's more of a leading indicator, something to certainly monitor very closely, as that has been on a modest upward trajectory for the last several months. Speaking of inflation, this is inflation week. We get CPI data on Wednesday. Expectations are for headline year-over-year price increases of 8.7%. I know that sounds like an astronomically high number. That is actually marginally better than the one we got the month before. Again, part of the expectation for that coming down, the more volatile food and energy components of CPI. Obviously, gasoline has ticked lower here. Food costs have come down marginally as well. So do expect some progress to be made on that headline number. In my opinion, more interesting is going to be the core CPI. Again, that strips out the more volatile or the more transitory food and energy costs. When we look at the different components there, things like especially rent that are sticky, that have continued to increase higher, I think that's going to tell the more important story as it relates to the Fed action going forward. Also on Thursday, we're going to get PPI data that in essence measures a company's input costs. That has continued on a upward trajectory. The concern there is as companies' input costs go higher, they have to either pass them along to consumers or have that erode their margins, which is not great for earnings. Thus far, as we've heard from majority of the corporate CEOs, companies have been able to pass along those costs. We've talked about a very healthy consumer that has been able to continue to meet that demand. The question, though, becomes longer term. Is that sustainable? And if not, under what pressure will those margins potentially come? Speaking of lower energy costs, we actually see oil trading beneath or below 90 a barrel for the first time in several months here. Now, that is a function of less demand. Interestingly enough, energy consumption is in line with where we were during COVID. Again, that's during the lockdown when everybody was working from home. Also, we've seen less supply. Again, I think that's a function of energy companies not having as high conviction that this rally will stay long term. Again, if you're a producer, it costs money to open up the extra rigs, the extra refineries. You're not going to bring a ton of supply to the market if you don't think that price is going to be sustainable longer term. Turning to the geopolitical front, two headlines there. First, over the weekend, we saw the House pass the Inflation Reduction Act. That has three key components, institutes a 15% corporate minimum tax. There's some clean energy credits in there. That sector is doing very well in early trading. Also, we have some provisions to make more affordable prescription drugs. Ironically, though, as we go through and look at the different components to that bill, nothing in there that really targets bringing down inflation. Nonetheless, obviously that name is very timely. I think in a nutshell, that probably describes Washington. And then as we go further out across the globe, continuing to monitor the follow-up from China. That was after Nancy Pelosi's trip to Taiwan. Hasn't led to anything meaningful yet. China has continued to ramp up the military exercises. Again, will be very interesting to see the long-term implications of that. Certainly the concern would be if China instituted a blockade, that would stir some supply chain concerns. Don't believe we're there just yet. And again, certainly something that we'll continue to monitor very closely. And finally, in other news, have some great news for air travelers. The DOT set forth a proposal that would allow customers to receive a full refund if their flight was delayed for more than 3 hours and/or there were additional complications to their air travel. So happy travels to everybody out there. That's all for this week. As always, please let me know if you'd like to discuss anything in more detail. Have a great week if you don't connect. Take care.